please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day. It's a Monday morning. It's a pretty flat start as we speak. The mid-cap index trading mildly in the red. And in fact, they have the Bank Nifty as well. That's as flat as can be. Sensex outperforming Mangalam today. Let's see where we go from here. But otherwise, a flat start to the week.
Flat start of the week, Nigel. You pointed the Sensex outperformance. I think that can primarily be attributed to HPCL because HPCL isn't a part of the Sensex 30, part of the Nifty, down about 3% post that ONGC HPCL deal, and which is making the bit of a difference on the Sensex as well as the Nifty. So the HPCL stock at the low point of the day, Sensex outperforming because it is not a part of that 30 stock index. But first up, all the top stories that we're tracking at this point in time. It's finally a done deal. ONGC buys government's entire 51.1% stake in HPCL for nearly 37,000 crore rupees. This mega deal ensures that the government not only crosses its FY18 divestment target, but revises it to 92,000 crore rupees. HPCL's MK Surana confirms that merging HPCL and MRPL now seems the most logical thing to do.
And Reliance Industries reports a strong set of numbers in the third quarter. Jio turns profitable for the first time with a reading of 504 crore rupees. The Petchem business rakes in 5,750 crores, while Wipro on the flip side trades in the red after reporting a weak quarter with revenue and margins missing street estimates.
It's pizza on the house after Jubilant FoodWorks earnings beat estimates with same-store sales growth and is at highest level since FY13. The brokerage firms upgrade targets across the board, raise EPS estimates by almost 28%.
And JP Associates reports a super turnaround quarter with a sequential increase on the income basis by 32%. The EBITDA as well jumps up by 250%.
Bumper listing for defense manufacturer Apollo Microsystems. The stock debuts on the bourses at a whopping 74% premium to its issue price of $275 per share.
Well, it's a quiet start on the Nifty, but let's see what's the trade on the Nifty as we speak. 90 minutes into the trading session, we're virtually unmoved. Ashwani joins us. Ashwani, what's the trade? I mean, we didn't see any follow-through buying after opening up in the green. And in fact, now we're absolutely flattened out. Is there a trade on the Nifty as well as on the Nifty Bank?
See, for the moment on both these large indices, Bank and Nifty, the market does not seem wanting to cross Friday's high. So that level is kind of getting rejected, and particularly on the Bank Nifty, ICICI Bank is down over 2%. PNB, Canara, State Bank all down over 1%. So it's basically HDFC Bank, Yes Bank, Kotak, which are kind of holding on the Bank Nifty. That's not a very good situation. My sense is that today is a globally kind of a soft day, and if we cannot cross Friday's high soon enough, I think market will tend to start to cool off a little bit, because Friday was a large rally. We are standing right in front of a key resistance, which is at 11,000. So some amount of cool off should be expected and is likely to happen once these large banks start to give up, because if you see ICICI Bank, HDFC Bank charts, they are basically vertical for last 6 days. Now at some point, these large banks will see profit booking. So today is likely to be, kind of flat to down day. As far as individual stocks are concerned, Sobha is a buy with a stop of 558, target of 580. Coffee Day is a buy with a stop of 354, target of 380. And Chennai Petro is a sell with a stop of 410, target of 384.
All right, Ashwani, thanks a lot for that. We'll keep coming to you all through the course of the day, but a couple of consumption stocks, keep them on your radar. Godrej Consumer, that one is at the high point of the day, up about 8% in the last few trading sessions. Stock on our radar right now is GNA Axles. Subdued start in today's trading session, but remember, over the last 1 year, the stock is up nearly 140% itself. They came out with their numbers during the weekend. A superb set as far as the revenue and profitability is concerned. So to detail more, we have Mr. Ranveer Singh, the president and the CEO of the company, joining in. Thanks a lot, sir, for joining in, and congratulations on a good set of numbers for the third quarter. Tell me one thing, 600 crores in terms for FY18, is that a given? You've done 465 crores in the first 9 months, 600 to 650 in FY18 and FY19. You also have increased capacity. What kind of revenue can you do in FY19?
Hello, good morning.
Yep.
Ranveer here.
All right. Mr. Ranveer Singh, just repeating my question. You've done 465 crores worth revenue in the first 9 months of this year. Is 600 to 650 a given for this fiscal? And you have new capacity coming on board as well. So FY19, what kind of revenues can we expect?
Actually, this year we will close over 600 crores. That will be, overall growth will be in the tune of 60, that will be 21%. And overall growth in 9 months we have done around 20%. And if we compare with last year's quarter, the growth is quite good because of overall market condition.
All right, Mr. Singh, just to reiterate that question, last time you told us your capacity was going to go up to around 4 million units, I believe, by March 2018. So in that context, FY19, what kind of a growth? You're telling us 20% is what you're aiming for in FY18. FY19, what kind of a revenue growth are you looking at, sir?
FY19, by this March, our capacity will be intact and our all debottlenecking will be completed. And next year, FY19, we are targeting over 15% growth.
Okay, over 15% over the 21% that you are speaking about right now, Mr. Singh. So if I just do a quick calculation, currently this year you're targeting about 621 crores on the top line. Next year you do around 715 crores on the top line. In that case, if you could tell us a little about the margins, are they going to stabilize anytime soon given the rupee? That one's at 64 odd as well. So does that hurt your company?
This percentage margin will remain same and it will be in the tune of 15.5 to 16%. This will continue.
15.5 to 16%. Okay, you're expecting that to continue. All right. Mr. Singh, a more generic question I wanted to ask you. The JNA axles is the play on tractors in India. Out of the total tractors that are produced in India, how many of them, what percentage of them have JNA axles? If you could give us a sense of that number. And also, I think Mahindra & Mahindra is the market leader in terms of tractors. What was the market, what was JNA's share in terms of those axles that are fitted in Mahindra & Mahindra maybe 1 year ago? And going ahead, what is that market share likely to go to?
Overall in the tractors, our market share is between 55%, around 55%. In Mahindra also, we are maintaining between 55 to 60%. And we are adding some more capacities for off-highway segment also because this market is going to grow in next 2 to 3 years' time. So definitely we'll increase our market share in this segment also.
So, but what was it earlier? If you could tell us, 55% of all the tractors in India that are saying that they have JNA as axles. What was it, sir, some time ago? Has that market share grown? Do you see it growing further?
It's actually in last 5 years, our market share has grown by 5% on year basis in tractor market.
Okay, 5%. I think the street likes what you're saying in terms of your revenue and margin guidance as well as the details that you're giving on the tractors. The stock has moved to the high point of the day. So let's take that point forward. You've spoken about tractors. Let's talk about a new business vertical, Mr. Singh. SUV business. When does that SUV plant first produce its output? What's the opportunity? I remember the last time you said about 100 crores is what you can garner from that plant.
SUV and LV division, that is, we have started the commissioning and building is almost complete and we have ordered the machines and this plant will start some commercial production by end of this calendar year. That is after September, we'll start the commercial production.
So, but what kind of, what kind of numbers you could give us? SUV is supposed to be a big trigger going ahead. When could we see, first revenues come out of there? How do you scale that up? 100 crores is what you were looking at earlier. Do you focus on the domestic market? Do you focus on the export market? Some more details, sir?
For SUVs, we are negotiating with different North American customers and followed by Europe and domestic.
Okay.
So we are targeting all three geographically, all three area zones, that is North America, Europe and domestic, that is Indian market.
You're saying 100 crores by FY20, is that what you're saying?
This SUV, initially we are putting up the capacity of 600,000 pieces per year, but on year basis that will be added as per the market condition and demand.
Okay, all right, Mr. Singh, so much, sir, for stopping by. I think the street likes what you're saying. So it's been a good first 9 months for the company. They're saying that, in fact, they're looking to grow by 15% even in next year. So revenues by the end of this year should look like around 620 crores. And going ahead, 15% on that as well. Margins maintained at around 15 to around 16%. And as we all know, that SUV segment, that's going to be the big opportunity going ahead as well. Thomas, let's get chatting with the management of Dwarka Sugar. Remember, the company posted a rather weak set of numbers in the third quarter. The sugar business posted a loss, but the cogen business, that was more or less stable. We're currently joined by Mr. Vijay Banka, the whole-time director and CFO of the company. Hi, Mr. Banka. Thanks so much, sir, for joining in. Well, first things first, why did you post, the sugar segment? There was a bit of a loss. Volumes and realizations, we understand, were higher. Then why did this happen?
The loss in the sugar segment for the quarter under consideration is mainly because we sold stock which was produced in this fiscal, which was obviously a high value stock that we produced vis-a-vis the stock that we sold in the corresponding quarter last year. In the corresponding quarter last year, we sold stock which pertained to the earlier fiscal, which was a low value stock. So we had margins of nearly 600 to 650 rupees a quintal there, which was not available this time, number one. Number two, the molasses prices have also been under pressure. We have sold and transferred to our distillery nearly 2 lakh quintals of molasses. So obviously, the margins have not been the kind of margins that we got last year.
Okay, so basically it's the commodity prices, the stock price itself, the stock that you're holding, which has hurt your margins. So in that case, will we see this continue, the kind of inventory you're holding right now, at what price? Does that mean that margins be under pressure, because the sugar prices have seen some pressure recently?
Well, you see, the prices of sugar have come down because of needless speculation and unnecessary phobia about the possible estimated production for the season 2018-19. That's some distance away, but already some numbers are being discussed: 28 million tons, 29 million tons for the season 2018-19. At this juncture, it is mere speculation, because hardly 10 to 15% planting has been done, and to come to a conclusion that it would be such a high number would be preposterous, according to me. But having said that, I must also say that the government, central government, and the industry association both are seized of this problem, and they are working out ways and means of propping up the market sentiments by, number one, there are various measures that are being discussed. Number one, hiking of the import duty. Number two, doing away with the export duty. And number three, reintroducing the MIEQ concept, which was followed 2 years ago, which was done very successfully.
Well, sir, what is the recovery level currently then?
No, we have, we have, our recovery trends are pretty stable and encouraging. On the same day, to-date recovery last year, we are a little ahead of to-date recovery that we clocked last year on the same date. And we are focusing on efficiencies, and we are focusing on recovery. So we don't think there will be any disappointment on the score of recovery.
Okay, no disappointment on the score of recovery. Then in that case, before we let you go, if you could tell us what's the kind of inventory that you're sitting on and the cost of that inventory, Mr. Banka.
It's valued at about 3,250 rupees. So that's the price at which it is valued.
Okay, all right. Thanks so much, Mr. Banka, for joining in fact, giving us all those details. But let's get straight to our next management. We're currently joined by the management of Lux Industries. Remember, they posted a strong set of numbers in the third quarter. We're joined on the phone line by Mr. Udit Todi, in fact, the senior VP of the company. Hi, Mr. Todi. Thanks so much, sir, for joining in today. Well, congratulations. It's a good set, 29% growth on the top line. Help us out. What were the volumes for the past quarter? And if you could help us out with the breakup of innerwear and winterwear.
Thank you. Thank you so much. A very good morning.
Morning.
I think quarter 3 FY18 has been plus. We posted a 29%.
I think we have a bit of an audio issue.
Hello.
Mr. Todi, if you could repeat your answer, I think there was a bit of a snitch in the line. So volume where...
Quarter 13 FY18 has been very good for us. We've posted 29% top line growth.
Yes.
And the PAT margins have also grown by 31%.
Right.
As far as the breakup is concerned, I think the winter this season was very good. We've seen increased demand from all sectors, from rural as well as urban. So winter currently, if you look at the overall year average, the winter contributes about 10 to 12% of the top line, and it has been the same this year.
Okay.
As far as volume growth is concerned, so most of the growth which has come this quarter is from volume.
Okay. So 25% volume growth, is that correct? 25%? What kind of a number we're working with?
So we always, if you look at the 9-month average, but the 9-month ended period, the volume growth stands at about 13 to 14%.
All right, 13 to 14% for the first 9 months. Remember, the first half you had done about 3 to 4%. So let's talk about the other two things then. One, the performance of your premium products. How has that impacted your average selling price? How has that panned out in the first 9 months? And secondly, post GST, everyone was talking about the market share coming in from the unorganized market. The last time I think you had a market share of close to 45%. Has that increased?
So the market share is somewhat similar because the effects of GST coming in will take some more time. Although the lag which was there, I think in second quarter has the third quarter was fairly good because whatever lag was there in the second quarter was covered in the third.
Right.
So talking about the premium end of the product, so the premium end of the product has been grown at the same rate as the company is growing. So that's roughly about 25-30%. And if you look at the yearly target, we are fairly optimistic of achieving a 12 to 15% annual growth in the top line.
Right, 12 to 15.
With about 12 to 15% of the top line, and we are fairly optimistic of achieving it because we signed Amitabh Bachchan as a brand ambassador. So the campaign will be launched in quarter 4 this year.
Okay.
And we are already seeing renewed interest from all the distributors across the company. So
okay.
we're very hopeful of achieving our target.
Quick question then. You've signed Mr. Bachchan. That should be good for sales. Would it compress your margins a tad bit? Or do you think, in fact, the sales that you're going to be getting is definitely going to offset that? And also a couple of other queries. What was the average selling price? And I didn't get your market share number. The last time you told us it was around 15%. That's still at around 15%?
So the market share, as I said, is similar to what we had last year.
Okay, 15%.
And 15%, right.
Right.
And,
signing Mr. Bachchan?
Yeah, so as far as Mr. Bachchan is concerned, so I think the increased sales which we are expecting this quarter should definitely offset whatever increase in advertising costs have been incurred. So the interest which you're seeing among the distributors has been phenomenal. We are also holding the first time ever we are holding all across the country. We have about 800, 900 distributors. So we're getting all of them together this year in the current quarter for an annual meet. And we're launching Mr. Bachchan's campaign this year with everyone all together. So we're very, very hopeful and optimistic that that campaign should be really good for the company.
Okay, before we let you go, just one last number. You spoke about Mr. Bachchan. You also have the brand rights to Virat Kohli's brand 1-8. Looking to launch in March 2018. What kind of revenue do you expect in the first year?
So first year would be, as it is a very new brand, so it's very difficult to project any numbers for the first year. But yeah, we are hopeful that it should be about 5 to 10 crores.
All right, Uday, thanks so much for joining and giving us all those details. Sadly, we'll have to keep it a little brief this time around. But thanks so much for joining in. Well, on that note, the market's as flat as can be. The Sensex is doing a relative outperformance.